Okay, let's get to Tokyo now. And we have Yuuki Sakurai, President and CEO of Fukoku Capital Management, joining us on the program this morning. Sakurai-san, first off, what do you make of these IP numbers, and what does it say to you about the broader Japanese economy?
Okay, I was rather forecasting a rather stronger figure than the market forecast, more than 0.5%, nearly maybe near to 1% or so, because we have a strong production activities in Japan after the rebound from the aftermath of the big earthquake last year. And also there's a strong people's movement to buy the new cars by the incentive from the government. So it seems rather good for the beginning of the year, for the Japanese fiscal year, starting from the April. Having said that, I think the budget for the incentive for buying new cars will be drying up by summer or so. So we may see some slowdown in the IP in the future.
But Sakurai-san, I mean, how can you say it's been a good start so far? I just want to bring up some of the economic data points that we got just in the last 24 hours. I mean, retail sales missing, not as strong as what economists had estimated. And don't forget, we also have the jobless rate ticking upwards as well, which is the first tick upwards in many, many months. So what do you think about the Japanese economy? Some are predicting maybe a slowdown in the second half.
Right. It seems that the Japanese industries are rather on the conservative side, having seen what's happening in Europe. And also because of the strong yen and maybe the increasing the crude oil prices. So they are rather on the defensive side at this moment. But having said that, I think we don't have our own problems in our own economy at this moment. It's just that we are rather export-oriented country. So I think all the industries in Japan are waiting to see what's going to happen in Europe in the very near future.
Okay, well, given the disappointment just now in the IP figures and also in the other economic data points that we just talked about, what does that mean for your trading strategy and your stock strategy going forward? I mean, how are you investing?
Right. I think what we are going to do is that, as I said, that we don't have a negative factors within the Japanese economy, or very strong negative factors. We just have to wait and see how the U.S. economies, the Chinese economies, and European economies will develop in the next couple of months or so. So what we'll do is we'll pick the very discounted shares in Japan, which is going to be moving very strongly after all the dust will settle down.
Okay, well, you know, there's a lot of dust. Some would say a sandstorm kicking off from Europe, of course. Sakurai-san, you've got to have a view on what's taking place over in the Eurozone. Do you think that we're going to still see the euro intact in 12 months' time?
Right. The problem in the Eurozone is very, very deep-rooted, I believe. Even though the election of the Greece may come in a favorable way, the market is looking for the other factors, other countries, which may have some problems in their balance sheets. So I think it's not going to end. It's rather the world economy is going to tie up with the ECB, and the IMF may try to join to rescue the European economies. We have to wait and see how these coordination will work.
Okay. Sakurai-san, thank you so much for your time as always. Yuuki Sakurai of Fukoku Capital Management.